but we just did conventional financing, truly. I mean, conventional financing kept the owner of the real estate company around for a couple months on a contract and did the transition. And listen, it's hard, transitioning teams and letting them know they have a new boss, all of that is hard.
For
And it was
sure.
particularly hard for me because it was a big adjustment. Like I said, 250 to
Yeah.
750,
You literally
two
tripled.
staff to seven. Just everything grew in complexity. You
Yeah.
can't do it out of your mind anymore when you have 17 members.
Today I'm speaking with Jennifer Ruelens out of Williamsport, Pennsylvania. Jen is the owner of One Focus Property Management, and she has grown her property management business to manage in the range of 750 doors. Jen is a little bit different than typical property management company in the sense that she decided to make a big splash in a small market. I'll take us straight to the interview now so that you can hear directly from Jen how she managed to grow her company to such a big door count and some of the trials and tribulations she's had along the way. So let's get straight to it.
So my journey into property management is just a little different than other people in the single family space. And that's, I came up through multifamily. So my story was after undergrad at IUP, landed in Harrisburg, Pennsylvania. I had started a company there with some other folks, and like first companies often do, it failed. And I found myself in need of a job. And I could always sell things. So I got a job leasing apartments at a 300 unit apartment community. And I just knocked it out of the park. There's a couple stories there, but they made me the manager within about a year. So at 23, I'm managing 300 doors, and I did several different assignments like that through Harrisburg with increasing size and complexity until I ended up at just about 500 doors altogether. But it was high amenity, high luxury. They're in central Pennsylvania in the Harrisburg area. And that's when the housing crisis hit. I took that opportunity to go to graduate school, got an MBA in real estate and finance, and then landed after that in the booming metropolis of Williamsport, Pennsylvania. And that was because I fell in love with a man and he was here, and we decided to make our lives here. And I started my business back in 2012. And now I brought what I thought back then, what I saw, and I still see, is a lack of sophistication in the single family rental market that multifamily has figured out. And they don't pay well in that industry, but I treat those years in that space as my kind of like property management graduate school. I learned the techniques, the disciplines, the processes, the things that quite honestly, some of my colleagues in the industry now suffer a little bit of like difficulty with. It was really taught secondhand there, how you run those things, how you keep it running like a clock every month on that cycle. So I started my business 12 years ago, and it's grown, and my understanding of how to do this for individual investors is what I'm passionate about now. I really like working with what I call regular people investors that my small town affords. And it's such huge impacts to their lives and their investments when they do real estate successfully. So I'm really happy with where I am and what we're going to be doing for a while in the future, because we're really locked in here. When you have a business like this, you're going to continue it for a long time, and that's what we're going to do.
For sure, that's awesome. So you came from, I guess, more of a metropolitan city, Harrisburg, and went to a small town. I guess, can you speak on what you saw in terms of the differences of services being offered, how you were able to maybe take some of the stuff that was being practiced in the bigger city and use it to your advantage in the smaller towns?
Totally. I mean, the first thing that was really obvious was, of course, as I came here, I moved into my husband's rental home, and we were seeking a larger one because it was really meant for just him when he moved here. And I learned that it wasn't anything like a larger city, finding rental housing or finding housing at all. It was much more person to person. Everything was owned by these individuals, and the experience of trying to get information or pursue rental properties was really frustrating. And so I knew there was a tremendous opportunity to serve tenants at a better level with the listings, right? To make sure that they were accessible to them, that it was easy to get information, that they were treating fairly in accordance with fair housing rules, and be given some of the conveniences, applying online, seeing video tours, just even self-showing. Some of that kind of stuff was really obvious right in the very beginning. And then when I started working with clients and realizing the people and services they were using before One Focus were really substandard. They were getting some really poor advice, and That still frustrates me, that investors aren't getting solid advice that, by the way, isn't difficult or novel. It's just not being talked about, I guess, as much by the real estate professionals in my market. And so I've turned to education and advocacy as the main pillar of what I do here in my business, particularly from a sales perspective. And I do that because I just so need it. I just need to open the eyes of these people that we work with of where there's opportunity that they're leaving on the table. So the sophistication level of the investor has been important. But I like being a big fish in a small pond. So working in this smaller market's been a huge advantage because there is no competition from a large player or a sophisticated player in my space. We
What
are that. We are the gorilla in the room.
What was that a bit of a concern when you were first starting? Like before you knew the market in and out, you moved there and you're like, no, you thought right away that there was the ability to make a big impact in the smaller market. You weren't worried about maybe not enough demand or anything like that.
I really wasn't, but there was something going on in this market when that happened that gave me a lot of confidence. So the way the story went is I emailed on LinkedIn anybody who was anybody in real estate. If you're a broker, developer, whatever, I was emailing you, hey, would you talk to me? Just kind of like these like networking calls. By the way, I don't sell houses, right? I have a license, but I'm not a realtor. And only one person said yes, and it ended up being my business partner. And they explained how Williamsport's kind of the home of the Marcellus Shale fracking business. So if you've heard of fracking, for oil and gas, for
Yes.
natural gas, right? Hydraulic fracturing. So the Marcellus Shale, which is a formation here near us, just by the way the politics of it all fell, Williamsport became the basis of that. And in the late aughts, early teens, it was really booming here, which created a lot of different things going on. It created owner occupied turning into investment property. Rents were way up. It brought in new construction. It brought in new hotel room builds, and basically all this upheaval. People were going to the market leader in real estate, who was my partner, and asking for it. And here I am in his LinkedIn inbox going, hey, I'm a property management maven. I don't want to sell houses. I'd love to manage them. And luckily we made a partnership and we grew this. And so what I saw here was not like, oh, is it a big enough market? I saw people needing help to maximize this opportunity, and that there just wasn't anybody here doing that for them with any level of sophistication. And that was frustrating to me. So I was really happy to come in and bring it. Yeah.
Got it. So you actually were able to find a market that was kind of on the brink of booming and in a smaller city where there wasn't a lot of competition and kind of own that market, right?
Yeah, but dumb luck. I mean, like I said, it was my husband moved here for the oil and gas industry. He's
Yeah.
a geologist. And so I met him right when he moved here. I was in graduate school at Penn State, and we committed to the area, but after trying to make a move to another area, to be honest.
Okay.
But this has been a great choice for us, a great place to build my business, and I found so much purpose here.
Okay, that's awesome. So you moved to Williamsport, you open up the company right away, I assume. And
Yeah, pretty much.
and now you have zero doors under management. What do you do to start to grow things? How do you get to the point
Yeah.
where maybe you're at 100 doors now? What does that look like?
Right. Well, it was really pretty freaking easy. My business partner was a locally established person, so he called the local newspaper. I remember like the first day I started, we had planned for maybe about 2 months. I had put some like things into place. I got a management agreement together, picked the software, just that kind of stuff. And after the first day or so in the office, we quick made a little like temporary sign with the logo we had come up with.
Okay.
And we called a reporter, and there was an article written in the first week of, hey, property management company in town. And really that got me my first 100 doors like that. Like
Just off
I
that
had
one
100 doors
news
within a
release.
couple of months.
Wow. Okay.
Yeah.
Just off
Yeah.
that one news. So
It
that
was
there really
filling
was,
a pent up need in the market. It
yeah.
was very, very needed. So, and being in conjunction with such a name, locally established company, so well regarded, positive reputation, that was really, really helpful for me being an outsider into a small community. That partnership, very, very great for me in the beginning. And like I said, it's not like I picked this person out and said, oh, they're the best one in the whole market. They were the only ones that said yes to my LinkedIn email, but they were the best choice, right? In hindsight, if I had to look, I would pick them again.
Yeah.
I would. Thank goodness it wasn't because I was so choosy and picky and smart. It's because it was just coincidence.
I,
Um,
I think there's a valuable lesson there for other property managers in the sense that you don't need to go after the major metropolitan market. it's actually much harder to get to make an impact in an area where there's already probably 50 other property management companies. If you can find that market that is underserved, that still, has a requirement for property management, you can grow at a much quicker pace. At least that's what it sounds like
Absolutely.
from you.
Absolutely. And I've never spent a dime on SEO or online advertising or pay per. I've tried pay per lead. It's never really panned out where I've had to like pay for anything because my
Mhm.
market doesn't get leads. Like it just like I can be on there, but I'm
Happens
going to get them
organically.
anyway, is my point. I'm the only one truly on there. My competition is realtors who do this as a sideline and a small handful of successful investors who've built a staff to serve their own that do this for other people somewhat as a sideline.
Yeah. So once you hit 100 doors in a couple months, I imagine from an operational standpoint, must
Mhm.
have been pretty chaotic. What
It
would
did
you
get chaotic till 200.
200? Okay, so
But that's because I was a good property manager before. I wasn't new to property man. Like I could manage the doors in my sleep, software processes, that wasn't hard. It
okay.
got hard at volume of tasks and then building the business and doing those things. That was very new to me. I had never had meetings with the insurance people and insurance audits and payroll and banks and lend. I'd never done any of that. So that stuff started at that 200 door level. How do I balance this? How do I get what's in here, the genius in my head onto paper so that these people that I'm hiring, right? The genius with many helpers was my MO for a long time. And so that's what started to get hard was just balancing time and not throwing my energy at it, right? Because I think all of us can outwork, if you're an entrepreneur anyway, you can like outwork most other people. And it starts to get sick and toxic when you're solving all your problems with extra effort.
So at what point did you need to make your first hire?
Oh God, I had unpaid interns probably like I started the business in September of 12. I think October or November. I had a series of I had an unpaid intern and then my first part-time paid employee was February. So it was at 5 months
Okay.
in and he was part-time for a month and then he was full-time. So and I did up to about 250 with 1.5 to 2 employees. I say half because I had part-time, sometimes it was part-time, sometimes it was full in that like admin capacity.
Mhm.
But then I discovered virtual assistants and I went with not a like Planet Synergy. So they're not like they've
Yeah.
hired, Maria who works with you those hours. It's more like a team that does tasks. And that was my
Okay.
first foray into starting to leverage like processes and people that I'd never met and that works like I still use Planet Synergy for those tasks. Nobody can do those better or at a better price. Period. You'll never convince me otherwise. But now we use remote team members and all of that. But that was probably a big adjustment was how do I make all this stuff in my head come down on paper.
Gotcha. So you've managed up to 750 doors at this point.
Mhm.
What door marks would you say were the toughest? You mentioned at 200, that's when things started to fall off the rails a little bit and you had to get things back in order. I imagine, growing that much, there must have been other points as well where there was a struggle. What would you say the most difficult door counts were for you in your experience?
Um, I mean, there's two most difficult door counts that come to mind. One kind of a while ago and one somewhat recent. So you're right. In the beginning, though, I mean, they're problems, but they're the problems you expected, right? They're the problems you expected. You knew it was going to get hard at these doors. You knew you wouldn't have as much time in the day. When I was at 250, I acquired a 500 door company. So I tried to buy my way through no man's land. No man's land is, traditionally recognized as that 200 to 500 door count where you're not making enough money to truly work on your business all the time and replace yourself in that seat. You need a bit more and you're working through processes and team and all that. So I did that overnight with an acquisition and that created a lot of people management problems which I solved, but then there was Jenn management problems. And I'm pretty frank about my journey with leadership and that it's been a real effort for me. I am proud of my work in doing that, but it hasn't, like I always say, property management comes so much easier than people management to me. It's much more intuitive and my instincts are right there. My instincts are not right in people management, so I have to work harder at it. And so I was halted. I was at like a ceiling for a couple of years while I worked through my ability to lead and master a larger team. I've since gotten through that, and I'd say I'm back in the people management stage because I'm in a different place now. I work much more as an executive director of my business. I'm the public face. I'm doing biz dev and sales exclusively, and I'm very rarely involved in the day-to-day of the property management. I design processes, I design guidelines, and I see the worst of the worst, right? Like if the building is burnt down, I'll be at the property that day. But short of that, I'm probably not going. The team is going and taking care of things. So, and I'll reach another point where I'm the problem, I'm sure. So that was a big one, that leap, but that's pretty unique to me. The problems aren't unique, but that situation. The other one would be recently we had a pretty, we had a legacy client. I'd signed them in the first year. They were my biggest client this whole time. They had grown over time through some different, not really purposely buying, not like that, but inheritances and stuff like that. The portfolio grew and it was over 100 doors. And
Okay.
this client got older and got dementia, essentially. And in that, changed the way they treated our team. So it was good business. It's good business. We liked the business. They became untenable. And I had kind of taken abuse for years personally, and then the team started taking it. And in this transition where I was out of the business and they were in, they were taking the brunt of it and they showed that wear pretty visibly. So we made a really hard decision about 7 or 8 months ago to terminate that relationship. And it took a couple of months to unwind and totally undo, but we terminated our largest client without a plan. I mean,
Really?
without a plan, besides we were going to get rid of this because it was toxic and ruining our team and hindering our company. And it has opened up doors, but it hasn't been overnight. There's been a recovery to that. And so as a a longer tenured property management company, I'm not proud of it. I'm not proud of the fact that we had to shrink our team a little bit as a result of this, but it was the right decision for our company and the team that we have. And I'd share with people, those hard decisions need to be made and they need to be made more quickly than we're probably willing to make them. That's something to remember is hard decisions need to be made faster than maybe easier decisions sometimes. So
Gotcha.
anyway, we're going through that and we've decreased our size a little bit, but we're so much choosier about what we take now. And I think it's the
On,
hallmark of a more mature operation.
on that note, do you generally try to attract people that maybe have one or two properties, or are you going after the person that has 50 doors? What do you prefer? What do you prefer about it?
We want investors. We would like to work with investors because we are a machine. So I say there's concierge kind of managers where if the owner wants the rent raised, they better call the manager and ask them to raise the rent. Or if they want an inspection done, they better call and ask. Or if they want to know why it's been vacant or why it's not renting. It's very much like relay based or like instruction based, where we're a machine. We'll tell you when it's time to raise the rent and how much we think it should be raised. We'll be visiting that property before you've ever thought about it. We've got so many things that are beyond what you've ever come up with. So I need an investor generally because they get it. They've
Just,
been
just,
down the
just to
road.
clarify, when you say investor, you mean somebody that has many doors, right?
Many doors, multiple properties in excess of one or two, or at least their intent is investment versus the person who has one or two, which what I would say in my market is accidental.
Okay.
If they're at one or two, they inherited or they moved out of the home, something like that.
Yeah.
And it's just the mindset difference. An investor can have just one house and can have one house for 10 years until they get their second house. I want to work with somebody with an investor mindset because they're going to appreciate the risk involved in this and our expert strategies to mitigate and manage it. And they're more likely to trust us. Accidental investors have a different set of considerations that, of course, our processes deal with, but the way we treat them, it's just not with the same panic they do. And I think they have a greater sense of comfort often with that realtor who does this as a sideline. You have their cell phone number. You can call Joe and talk to Joe at 8 p.m. on a Saturday about the lawn at your rental property. That isn't happening at One Focus. But trust and believe we have it in hand. We're happy to talk to our clients, but it's going to be more of like that machine sort of approach. So But we do help accidental people because our services are great for them, particularly the accidentals who don't know what they're doing and need to be hands off. And we have a great relationship with them when they are willing to go, I know nothing of this. You're the boss, right?
Yeah.
But
When
that's just valuing
when
expertise.
working with investors that have a large amount of properties, how do you mitigate the business risk, right? Like for example, you mentioned you lost 100 doors kind of like that
Yeah.
overnight. And that's part of the downside of working with somebody that has many properties. What do you do to try to mitigate that? Do you have a backup plan in case you are to lose that and know like which staff you would need and which you don't? What does that look like?
You know, like I said, that one client we lost with over 100 doors was our largest client our whole time in business by far, by far. And
Hmm.
so I don't have a backup plan. I have thought about it when we've considered and worked with different clients and brought them on. Um, I've considered, different sorts of contract requirements potentially because we do month-to-month agreements
Yep.
with our clients. That's our guarantee. You can get out with 30 days notice. But if I'm onboarding your 75 doors and doing my typical value add strategies, the truth is I either need probably an upfront fee or a commitment of time to make that worth it. But that's about it when it comes to mitigation strategies. The only thing you have to, I mean, we need to be watching our owners per or our doors per owner KPI, which I'm now following and watching, and that's something that's now it's been benchmarked. I'm kind of tracking against, but no, nothing specific besides as we consider adding people, what that looks like.
Okay, got it. Got it. So another thing that I have a question about is you mentioned that you bought a property management company that had 500 doors. What
Yeah,
did that look like? How did you find it? How did you structure the deal? Can you take us a little bit through that process?
yeah. Um, Pretty straightforward. I mean, my business partner at the time, and I bought him out a couple of years ago, so we're no longer affiliated. But at the time, he had a lot of growth ambitions as well, as did we. And we both wanted this next market, this kind of half hour away little market. And we had made a play to buy, like my partner had called around essentially and talked to all the brokers and got one interested. We went down the road with them for a while, and then that ended. We didn't get to the table on that. And this other one had told us no, and then how did it go? They had told us no, and I had said, well, that's it. I'm going to go hang a shingle. I want to go to this town. My partner was like, all right, we'll go in this together. We'll get one office, set it up. And I'm a big believer in like hang the shingle and they will come. Like I will do this fine. And I had a team member lined up to hire, and I think I was like writing the offer letter, and we got a call from this like kind of prize acquisition opportunity saying, "Hey, you said you were interested. You wanna do this?" And I like pulled back the offer letter, had to call the candidate and be like, "I know I was like telling you to expect an offer, but we got a phone call, and I think you'll be happy in a couple of months, but I can't make you an offer right now because I was still going to bring the person. This just changed the timing of things."
Okay.
And so, how did we structure it? It was I mean, not extra complicated, but it was one entity that was real estate and property management together. They ran everything, one set of books, a lot of common staff. And me and my partner ran things really separate, different books, different entities, different staff, different licenses. And so we had to, what was probably hardest was analyzing their books to figure out what was what expenses went where, what income went where. Because as you can imagine, advertising's all in one and
Yeah.
different admin stuff's all in one. It
Typical
wasn't
small business balance sheet
typical
and P&L.
stuff.
Yeah.
And, the organization of the negotiation of the deal really happened with my partner and his kind of right-hand person. And so where I feel like I didn't do so well was in properly identifying the split of cost. So of the number that we paid for the entity, we each got assigned a portion. And it's my belief that I probably through inexperience and naivete did not focus enough on that on, hey, what of this is truly ours to bear and things like that. And so, but we just did conventional financing, truly. I mean, conventional financing kept the owner of the real estate company around for a couple months on a contract and did the transition. And listen, it's hard, transitioning teams and letting them know they have a new boss, all of that is hard.
For
And it was
sure.
particularly hard for me because it was a big adjustment. Like I said, 250 to
Yeah.
750,
You literally
two
tripled.
staff to seven. Just everything grew in complexity. You
Yeah.
can't do it out of your mind anymore when you have 17 members. It was something so silly. Like the first day we bought it, I think it was like a January 1st. And so the first day in the office was January 2nd. And it was just thing after thing after thing, even though I tried to be so prepared, I didn't have. So like the former owner had stopped buying office supplies like 6 weeks before. So when we showed up on January 2nd, there wasn't a piece of paper or a pen. And
Okay.
like it was that kind of thing. And then oh, what was the other thing that happened? Oh, like one of my new team members got to, really take care of him, comes up and says, "Hey, I have a vacation plan for March. How do I put in requests for that?" And I was like, I don't know. Like, we don't form. I don't like, what are you talking about? And that
We're
was
not
just like
taking
really
vacation. We just bought you.
well, yeah. I mean, of course, I actually believe you can take vacation,
No,
but
I'm just kidding.
they just never done it with like I never needed a form. Like somebody would just say it to me and I'd put it in my calendar. There was only one or two of them. Like it wasn't so all of a sudden I had this, I had health plans, I had like new layers of stuff that wasn't property
Yeah.
management.
The,
Yeah.
the the complexity grew by threefold overnight, basically. That's
It
yeah,
really did. And
that
it,
can
and
be
it
tough.
threw me for a loop. People don't, I don't think admit it or talk about it, but I'll tell you, it threw me for a loop.
Yeah.
And I'm not a dumb girl. I've got an MBA. Like
Yeah.
I
Yeah.
really try to normalize that, stuff's hard. This stuff is hard. We
Yeah.
should not feel bad when we don't know what we're doing and that, or if we don't do as well as we thought or as quick as we thought.
In terms of purchase price, did you negotiate it based off the number of doors? Was it based off of like EBITDA? What was like a multiple of EBITDA? What was the process there? Like, how
We're
did that?
going back 7 years, so I'm not entirely remembering. You know what I mean? Like,
Yeah.
and of course, it was a hybrid purchase, so and I wasn't entirely in charge of it, so I was a bit of a bystander to the own negotiation because of
Okay.
my my ownership percentage in the company and who was truly signed. I mean, we were all signing on the dotted line for the loan, but it wasn't my credit and house and everything they were looking at. It was my
Okay.
partners. So I
Okay.
just truly couldn't answer that for you. I'm sorry, I
No
don't
problem. That's
remember.
fine. So let's go back to present day then. What does
Yeah.
your current team look like? What are their roles? What's the day to day
Oh,
of
I
those
love
positions?
I love my team. So I won't get into each position who's remote and who's not, but we're 15 total, and
Yeah.
five of those are remote. We work with Hire Smart out of the Philippines. So we've got five through that agency. We still have Planet Synergy. So me, I'm the visionary of the company and I head up sales. So that is the only thing I still do in the business is I still choose the clients and properties that we bring in, but I'm doing business development and things like that. My director of operations, Jessie, she is my integrator and oversees all operations. And really, we are getting pretty close to handing off where I don't do anything at all with that anymore. The accounting department, one accounting manager, one assistant. Property management department, those are our licensed folks. So that's Jen, the head of that department, a full-time leasing agent, a leasing assistant, and then a tenant relations manager who is also the property inspector. And then maintenance, we have three in-house techs, two coordinators, and then a position that's a little unusual to us is vendor coordinator. And
Okay.
that is a full-time person in office who is just managing subcontractors. So managing all those people, all those vendors who do all that work, attracting them, retaining them, doling out jobs, holding them accountable, processing invoices, all of that for them. And then the only other person I missed was Lindsay, my executive assistant. She's been with me 4 years. She's making it possible for me to do that sales role in addition to all the other stuff I do. So Lindsay's doing social media management. She does some HR responsibilities because I still have some like final line on that. And so basically, if I have to do it in the business, Lindsay's probably the one more doing it at my instruction. So
Gotcha.
yeah, that's the team now. And as we grow, you'll just see me touching less and less of stuff in the business and just probably working full time in sales and business development. That'll be my direction. And I love that. That'd be perfect for me.
Okay. Awesome. Awesome. That's sounds like you've got a pretty good team in place, and I guess that's what really allows you to do stuff like this right now, where you have time
Well,
in
the
the day
last couple
to
of years has been a battle of building the greatest team, and I have the greatest team. I really do, which is why it was so heartbreaking when we had to lose a team member or two during the loss of those doors. We had to lose a team member or two, and it was tough because I got all A players. I really
yeah.
do. I've got all A players. The work we've done the last couple of years has really resulted in a crackerjack team.
That's great. That's great. So outside of property management or outside of the office, let's say,
Yeah.
obviously property management is a cash flow business.
Yeah.
What are you doing with that cash flow? Where are you investing your money? Is it all in real estate? Are you, what does that look like? Can you take us through that?
Real estate and self-improvement.
Okay.
That's it. I mean, real estate and self-improvement. So I see, of course, real estate, I preaching to the choir here, right? That is the best investment vehicle, particularly for those of us who have abnormal abilities in it. It's awesome. Self-improvement. So whether that is therapy, physical health, medical health, I treat all of those investments like they're investments in my financial future because they
Well,
are.
they say the best investment you can make is an investment in yourself, right? So I guess that's literally what you're doing there. Makes sense.
Yeah.
The real estate you're investing in, is it all in your market because that's where you have
Hmm.
the most knowledge? Yeah,
Um, yes, and I have the most trust and control.
makes sense. And all in single
I have an
family?
awesome team. I have an awesome company. Who else would manage my investments? Also, this region, just coincidentally, I didn't pick it for that, but represents a tremendous opportunity.
Gotcha.
So we've got great cap rates. I mean, the things that people struggle with to make money here, we've figured out. It's management, it's construction, it's maintenance, it's that kind of stuff.
Okay, got it.
Yeah.
So I know you off of this show, obviously. Um, and I know that you always have really good stories. So I want to ask you about what is one crazy story that you have from property management that you could share?
Well, I mean, mine tend to be gross and weird. I like weird stuff. I
Okay.
like the panty stealers and, like hiding in the closet. So let me think here. There was one where
Sounds like there's
we,
multiple.
well, it's pretty much what I did was paid in the first 20 years of my career was good stories because there wasn't a lot of money in this in the beginning. There's one where we were doing, there was maybe a 20 unit building and it was student housing. So we were in just after the kids all left and we were doing the walkthrough of all the units and what needs to be done and whatever. And it was me, my head of maintenance, who was also a woman, and then a female intern. So a young woman, college student. And we're going through and we're having to kind of like open up all the doors, check the backs of the doors, and we're like making these lists. And the intern's kind of freezing in front of this closet. And me and the other girl are running around and we're like, what's going on, man? Get in the closet. Like, let's go. And she was afraid because we had told some squatter stories. So we had told some squatter stories at one point. They'd stuck in her head. And she's like, so my coworker goes, what are you scared of? If there's somebody in there, you're just going to have to fight them. Right. And I go, okay, cool it. Right. Of course, there's nobody in the closet, whatever. We go outside, we're on the sidewalk. And I kind of had one of these, like, I got to be the grown up here. That was fucking funny. But like, I got to be the grown up here and be like, you know, team member, we can't be saying this to the intern. I go to the intern, like, don't worry. It's like summer. There's not going to be squatters in summer. It's just in winter. Right. So we go in the basement, like literally I have this little conversation. We go in the basement and it's like kind of full of like building materials, tubs and vanities. So it's kind of like difficult to get around. And there was this like ramshackle bathroom made down there, I guess, to serve, the guys who worked on it. And us three ladies are down there, and do we not hear somebody using that bathroom talking on the phone in
Oh
there?
boy.
Their eyes just go, and I, do the like get out. And then I did my, patented, I'm going to be so much scarier than you right now while you can't see me. So I put him on the like, and start saying some real cuss words and just to scare him. Like my job is not to make you come out of that bathroom ready to fight me. It is to come out going like, what am I going to find? I got to get out of here. So I immediately found a guy using the bathroom in the basement that I shouldn't have, upon telling the intern, don't worry, like it's warm out. There won't be any squatters in this building.
And then the
Oh
intern
well.
quit the next day.
No,
I'm
no,
just
she was
kidding.
a good girl, but she stayed committed to her plans to be a dentist.
Okay.
She, she wanted to be a dentist, the little darling, and that's what she's doing now.
Awesome. Awesome. So if you could go back in time to when you first started your business, what is one thing that you would implement quicker to help you succeed at a faster pace?
You're not going to like it.
Okay.
It's to not be fascinated with speed. The thing I've really had to reconcile with the last couple of years is although I'm an overachiever, although I can outwork others, although I've typically been able to do things at I'm not going to set a speed race building this company. And I'm not going to set a speed race, not because I'm like balancing my life and taking my time, although I am doing that. I am balancing my life and all of that. Building something good is just not going to be done quickly. Fast is the enemy of great, and I'm trying to build something great. And so, what would I have done earlier to make it easier or make me more successful? Um, I probably would have invested in the leadership training, the development, which is crazy to say. I'm like highly freaking educated. I mean, I've had a lot of classes on this stuff, but for me, it's a real weak area. It's one of those I have to work on harder. And so I probably would have been doing that in a more diligent way. I always had mentors. I always had people helping me. God, this is not making me sound good. I had all this support and I still struggled, but I probably should have made more investment in that. Probably should have been paying coaches earlier, been focusing on that more, and not being so dependent on just the people who happen to be around me. I should have been seeking out somebody, and that would have probably given me more confidence in the early years. I have a lot of confidence now. I didn't have a lot in the early years in that this is okay. The way I'm doing this is okay. And the way I'm doing this is going to work. I know now it's going to work. I know the way I do things is great and works in business, but I didn't have that then. So my new kind of rule when I see things regarding like doing things faster is just to almost immediately reject it. Like, I want to ask a different question. Like, I want to ask how I do it better, stronger, more efficiently, or more uniquely. So yeah, I would have gotten less enchanted with speed.
Gotcha. That's no, that's good advice. I think you touched on something that I say all the time as well, which is find someone that knows how to do or that's been where you want to be and just offer to pay them for advice. It,
Yeah.
it really works. And most people that have gotten there, when they do get a reach out from somebody, they're almost honored. So especially
Oh
if
my
you ask
gosh.
them, say, you know, I'll pay you $1,000 for an hour of your time, and you just help me with these problems. It sounds like a lot. $1,000 for an hour. You're like that for a lot of people. They're like that's crazy,
Yeah.
but you got to think of it in terms of the return that you're getting from that hour. If you're able to do something that's going to help you accelerate the growth of your business, it's going to bring you in way more than that $1,000 that you have to pay.
Yeah.
So yeah, I definitely get what you're saying there. Any departing words of advice for a property management company that's looking to get to, you know, that 500 plus door mark that you've accomplished? Um,
Hmm.
Anything that you think they should know?
Anything they should know? Well, I, up to the 500 door mark, and quite honestly, to the 1,000 door mark, I think NARPM solves a lot of problems for people. NARPM standing for National Association of Residential Property Managers, particularly somebody like me who's in this small market. There's nobody else within 200 miles who gives a crap about what I love here in this business and wants to
Mhm.
talk about it. I've got to drive to meet those people. So NARPM's been great for me, and it's been awesome to get super well connected in that group and start to learn from these people. Because to your point, I've made many of those calls. Hey, person I admire in this industry, would you give me some time? And every single time the red carpet is rolled out for me. I have
Mhm.
sent my director of operations to Minnesota to meet with a company. I've gone to Jacksonville, Florida to meet with a company. Other companies have sent people to my office. So I treat it like almost now like those exchanges are almost like internships when I was younger. I was a big fan of internships. I love to do them. I thought like it worked really great. I don't do so much with internships yet or now. I've done some a little bit with the company, but now this ability to almost like foster and mentor others while I take. So I make sure to give when I'm asked. And I ask of those above me. And I try to be of service to them and be grateful and gracious. And that has panned out really well. So I think NARPM's a great vehicle. You can do it without NARPM, of course, but NARPM's going to put all those people in the same room with their head on the same thing. And you're just more likely to, so NARPM earlier in your journey would probably solve some problems too, a little bit easier than struggling alone.
Yep. No, I agree on that. And there's a lot of people that we work with that are, let's say, in that earlier stage that we recommend go check out an ARPM conference, and they come back and they're like, oh my God, this has really been an eye opener for us.
Yeah.
So I definitely think that's some good advice for anybody listening. For anyone that wants to connect with you, that likes what you have to say or would like to keep in contact, where would be the best place to reach out to you?
Send me an email, Jen, Jen, at onefocuspm.com. If you hop on the website, lots of ways, or LinkedIn, you can get a hold of me. But yeah, like I'll, as a fan of sending random emails, I like getting them too. So reach out.
Cool. Awesome. Thank you so much, Jen.
You're very welcome.